Good afternoon. My name is Tim Legman with B.I.S. Commodities, and looking to give a little bit of a summary for this week's commodity market, specifically the soybean and grain markets. I think the summary of the week can be summed up in one word as weather. Hot and dry has been the main focal point as we've seen explosive high markets on the Sunday night trade, and we're able to propel and follow that momentum through most of the week. Also, we did see a quarterly stocks report this week as well. It came out 7:30 this morning. This is the first time we've seen the quarterly stocks and acreage report revealed during the open session, which provided some sparks and fireworks as well this morning. For the week, we've seen December corn closed 80 cents higher. We were up $1 at one point this week. July corn closed 80 cents higher for the week as well, and most of that came in today as July is in delivery, first day of delivery, and we did see the July contract propel 20 cents this week. July soybeans closed 71 cents higher for the week, and November beans lagged, only closing 53 cents higher for the week. I guess the highlights of the week probably is all about hot and dry, with heat indices reaching over 100 degrees in most of the Corn Belt at one point this week, a lot of 90 plus degrees as the southern Corn Belt is tasseling and moving its way up through the northern Corn Belt. And all eyes will probably be on weather moving forward. But this morning we did have our quarterly stocks and acreage report, which provide a lot of nervousness going into this report this morning. The trade was looking for a stocks report and corn at a 3.18 billion bushel carryout or stocks number, and it came in slightly below that at 3.148. That was viewed a little bit bullish to the market, but it was offset by the larger than expected acres. The trade was looking for somewhere around 96 million acres. We came in at 96.4, almost 2 million more acres than the March estimate. Soybean stocks, we were looking for about 640 million. We came in at 667. That was more than what the trade had anticipated as well. And acres came in at 76.1 million. The trade was looking for 75.5. That came in about 2 million more acres than expected. The report as a whole is probably viewed as neutral, slightly bearish beans, neutral, maybe slightly positive corn, and we traded that for the first few minutes, and then it was off the weather. There was probably a sign of relief for the bulls that we didn't see a shocker in place, and weather forecasts are the premium, or is what the trade will be looking at as we move forward. As I stated this morning, there was some excitement for the first couple minutes. In the first 2 minutes this morning, we did see December corn trade at 27 cent trading range. November beans did trade in the 31 cent trading range. We did see them both trade briefly in the red before. We've seen the strength come back into the market. December corn did make new highs, recent highs, as we were able to trade up to 656 this week in the December 12 contract. 673 is the old high from last fall. It will be the focal point as we move forward. Continuous corn contract, though, when you take a look at the front end of the corn market, it is constantly traded between a 575 and a 675 trading range, and it seems to be pretty consistent, dating all the way back to September, and we are right now right at the top end of that trading range. When we get up to the top end of this trading range, it seems as if we are choking off a little bit of the demand on the front end of the corn market. We did see basis levels back off this week. We continue to see poor exports. So maybe it's telling us as we approach this level, we are hurting demand a little bit. As we approach these levels as well, the concern is the profitability of ethanol plants as they are perceived to be operating in the red. And with the energy markets for most of the week, crude oil below $80, the concern still mounts. as how profitable and will the ethanol plants continue to pay up for corn, or will they slow down the grind? And there is talk and have been some plant closures this week. The November bean contract did see a new contract high. The November 12 bean contract at $14.39. The balance sheet is still viewed as very tight moving forward. The report today added a little bit carry out to that. Certainly weather will be the main focal point as we move forward. As we digest these numbers, the next report that we're going to be looking at is the July supply and demand report. So we're going to incorporate a carry out now, and we're going to incorporate acres. The question in the July July S&D will be what type of yield. That will all be determined on weather as we move forward, and crop ratings as we move forward. Certainly, as we've been able to push these prices higher, it's a great opportunity to try and get some sales in place, or at least protect these levels. If it doesn't rain, we could see another leg up in the corn and soybean market. If the rains over the next few weeks perform better than expected and temps back off, we could see a significant down move. We're in a violent period right now, with weather being the focal point. So certainly take opportunity of the prices that we are given. As I stated earlier, the energies were down for most of the week, but we did see an explosive close today in the oil market, as we were shooting oil up over $7 near the close, and the dollar index was off $1.20. Certainly it's a very supportive macro move. Could be tied to the thought process that the concerns in Europe are maybe getting a little bit better, as they did reach an agreement to bail out Spain and Italian banks today. So that may have lended the support to the energies, to the dollar, and to the stock market, as it was closed up over 200 points. In the livestock markets, we did have a quarterly hogs and pig report this afternoon come out at 2. The trade was looking for 101% of last year at this time, and it came dead on. Shouldn't expect anything there. I think the cattle and hog markets this week were supported, mostly due to the concerns. We did see some strength late in the week. I think it's heat concerns as far as production aspects, and also maybe trying to put a temporary low in this macro market may have helped cattle and hog futures as well. We've seen a very limited trade as far as cash this week in cattle. There was some light trade at 118 this week in the Nebraska area, and I think the focus next week will probably be a little bit on cash again, but I think it's going to be the macro market and how is corn going to affect this as crush margins continue to deteriorate for both cattle and hogs. If you have any questions about these or any other markets, feel free to give us a call here at B.I.S. Commodities at 1-800-373-2525, or check us out on the web as you are. Thanks.